My apologies, because the clock at the next room was not working. That's why it took us more than 10 minutes before we could cast our vote. All right, we are now back. So, Ms. Yen, can you continue? Yes, just now, as I said, for the existing exemption criteria, that might pose some problems to some existing private equity funds. What the current definition of securities do not include them. That's why we would like to propose an amendment so that for portfolio companies where such private equity funds would be investing in, they would be covered by the specified transactions definition. And also for these private equity funds, they will have to meet certain criteria before they can enjoy tax exemption. First, they will have to be incorporated outside of Hong Kong. So they will have to be non-resident entities. And also, during the previous 3 years, these companies have not engaged in any business or transactions in Hong Kong, or they do not hold any immovable property in Hong Kong. So under the premise, we have to consider two parts. Number one, there should not be any abuse, and we also have to consider the actual mode of operation for these private equity funds, and therefore we have to come up with some detailed rules and regulations, and that's why for the de minimis rule that has been set out in para 11 of the paper. Second, for the offshore private equity funds themselves, under the proposal, we hope that they would be able to enjoy some exemptions. As we said, for specified persons, they currently enjoy some exemptions, but then for offshore private equity funds, they may not necessarily have to be managed by specified persons by the SFC. That's why we will have to include certain new provisions saying that for the specified transactions, if they are conducted by offshore private equity funds, and if they are qualified, then they would also be able to enjoy such exemptions. Well, let me now move on to what's meant by quality or qualified funds. First of all, at any time after the sale, that is after the final close, the investor would not be the originator of the fund. So they are not the associate or the originator of the funds. And also, there will have to be 5 persons or above in the company. And for the capital, that will have to exceed 90% of the total capital. And also for the originator of the fund and also their affiliates, in terms of the net proceeds, that should not exceed 30% of the net proceeds arising from the transactions. And in order to avoid abuse, we propose that the requirements would also apply to offshore private equity funds. In other words, a resident person holding a beneficial interest of 30% or more in a tax-exempt qualifying fund will be deemed to have derived assessable profits in respect of profits earned by the offshore private equity fund from specified transactions. And also we understand that some private equity funds would also be making use of special purpose vehicles or SPVs in conducting their transactions. We propose that the definition of securities be amended such that a transaction in securities in an SPV will not be excluded from the definition of a specified transaction, and there will also be an express provision to give tax exemption to an SPV in respect of profits derived from a transaction in securities in an interposed SPV or an eligible offshore portfolio company. We further propose that the SPV, which will have to meet certain requirements, for example, they will have to be registered or appointed in or outside Hong Kong, and and it can be wholly or partially owned by a non-resident person and should be established solely for the purpose of holding directly or indirectly or administering the qualified portfolio company. So this is the current thinking of our proposal. And during the past year or so, we have been consulting the trade, and we have also taken on board their views before we come up with the proposal. And we are now working very robustly to amend the Inland Revenue Ordinance so that the draft amendment bill can be available during the first half of this year. Okay, the floor is now open. I'll read out the names. Kenneth Leung, Sin Chong Kai, Ng Leung Shing, James Tian, Wong Kwok Heng. First, Kenneth Leung, 4 minutes each. Thank you, Chairman. First of all, the exemption will be given to some offshore private equity funds. So my question is, for locally incorporated private equity funds, well, all along the IRD's approach is that if there is a Hong Kong private equity fund buying or taking over this portfolio company, the minimal requirement would be that you would be looking at the capital of the company before you decide whether or not you're going to charge them tax, right? Well, the question is that is a Hong Kong private equity fund, but today what we're proposing would be granting exemption to offshore private equity funds. And of course, in the consultation period, the trade has also suggested that locally incorporated private equity funds should also be exempted. But then the scope would be a lot broader, and there are more factors to be taken into account. First of all, on the fairness issue, because for the investment of the private equity funds, they might be investing in different areas, but then for the other areas, they would be asking, all right, if a local private equity fund can be exempted, then how about other non-resident entities are not exempted? This is something that we have to address. And also, we would also like to prevent abuse. That's why we will have to think about it more carefully. Mr. Chiu, do you have anything to add? Thank you, Chairman. On the operation of the of private equity funds, the IRD's view is that we will have to look at the operation of private equity funds. All right, they have investments, and they would also have to manage assets, and they would also have this financing arrangements. So they would be trying to work out. They would try to work out the accounts of the companies, and then they would try to sell off the items or the projects. Very often such procedures would take place in Hong Kong. And as far as the IRD is concerned, if such operations take place in Hong Kong, then the proceeds or profits derived from such operations should be deemed to have derived from Hong Kong, and therefore they would be tax accessible. As to the question raised by the member, what about the capital? Well, we will have to look at the situation on a case-by-case basis. For example, if the shares held by such companies have not been engaged in active trading, then there is a chance that we might treat that as a capital gain, which is not subject to tax. So we will have to look at that from the general principles. So you will have to look at whether or not there has been an active input or active management. So you would not be looking at the years of operation in Hong Kong, whether or not it has a long history or a short history, and also the portfolio of the company. Well, it depends on the operation test, so to speak. So if the profits have derived from Hong Kong, including the investment decision and whether or not the financing has taken place in Hong Kong and whether or not the management has taken place in Hong Kong, and eventually whether or not the sale has taken place in Hong Kong, and if all these acts have taken place in Hong Kong, then obviously the profit has derived from Hong Kong, and therefore the proceeds should be taxable. But then if some of these procedures do not take place in Hong Kong, and if it's just held in Hong Kong and then they just sell it in Hong Kong, then that would be treated as a capital gain, and that would not be subject to tax. All right, I'll wait for another round. Next, Mr. Sin Chong Kai. Chairman, this is also a technical issue. I'm sure that will be subject to further discussion at the Bills Committee. And I would first ask about some policy issues. Well, in the paper, you said that the AUM, there are many, and for private equities, well, in Asia, Hong Kong has taken up about 1/5 of the total trade transactions. So what is your policy objective with the new exemption? So what kind of change do you expect to take place upon the implementation of your new proposal? So how many more private equity funds can be attracted to Hong Kong? So how many assets will then be managed in Hong Kong? So can you give us your rough estimate, Ms. Yen? Well, the policy objective, as the honourable member has pointed out, we would like to attract more private equity funds to conduct certain investment arrangements in Hong Kong so that they can tap into the talent pool in Hong Kong as well as the resources in Hong Kong. And through our communication with the trade, we can see that they have a huge interest in expanding their business in Hong Kong. Even if they have not yet set up their base in Hong Kong, they would very much like to manage their investments in Hong Kong. And that would also mean that they would have a bigger interest in Hong Kong. But then because of the tax arrangements right now, there are areas which they are not entirely clear about. That's why through the arrangements with regard to the application of the tax regime, and if they are clearer about the exemption scope, then they would be keener to come to Hong Kong. As to the specific details, we don't have a specific figure. We can only say that they are quite interested. In particular, for those that are investing on the mainland, they would very much like to make use of the platform in Hong Kong to manage their assets and also provide professional services, for example, accounting and management services, where Hong Kong would be able to provide a very good platform to them. And also the investment targets might not be Hong Kong companies, but then in recent years, mainland private equity funds have seen significant developments on the mainland. That's why that would make Hong Kong a preferred area for them to set up a base. Would you be targeting mainland funds or European funds or American funds or what? Well, I suspect that some would come from the mainland, but then in fact, many have indicated to us that many overseas funds would like to come to Hong Kong, or private equity funds that are interested in the mainland would also come to Hong Kong. But then on the mainland, many private equity funds have also told us that they would like to invest in Hong Kong and manage their assets in Hong Kong, and therefore the Hong Kong base is a very attractive one to them.
Hong Kong, well, we shouldn't just look at a specific region. We want to make Hong Kong a hub. Whether they're investing wherever they're investing, some may be investing in emerging markets, some energy items. Somebody in Hong Kong are doing investment in energy items. We want Hong Kong to be a hub. Mr. Leung Shing.
就住呢個
Mr. Leung Shing. Well, I welcome the tax exemption. Now, concerning the lessons learned from leasing, we need to assess who will stand to benefit. If you tighten the rules, then many will lose. For example, leverage leasing, we've learned experience. When you close the doors, then others will be deterred. Now we open the doors. That should bring us some benefits. the related professions will be benefited. I therefore welcome it. Now, at the end of 2013, the total capital under management in private equity was $99 billion. That was an increase of 16% from 2012. And now, as at the end of September, total asset $111 billion US, or 21% of Asia's total capital under management in private equity. Everybody is looking at the Chinese market. Just now, members asked about the European and North American markets. Now, when assets become cheaper, funds may go there. If you can attract the funds to come to Hong Kong and do management here, that will be beneficial to Hong Kong. Raising Hong Kong's status as a hub is related to the tax issue. Now, in Para 16, there are 5 or more investors who are not associates of the originator of the fund. This is one of the criteria for tax exemption. 5 or more investors. What is your reference for setting this level? Is it too small? I'd like to listen to your view. Ms. Ann. Thank you, the member, and thank you for your support. Concerning number of investors, we propose 5 or more. We've made reference to the present operation of private equity funds. When they recruit investors, they do recruit a lot, but we don't want to allow any abuse. If 2 or 3 people, only 2 or 3 people invest in the private equity, there is a higher chance of abuse. If we set a higher threshold, then we may prevent bona fide private equity funds from enjoying the tax exemption. We've observed the operation of private equity fund business in Hong Kong. We've looked at the tax avoidance arrangements, and we set the line we draw a line at 5 or more investors, and this truly reflects the actual operation of the private equity. We have asked inquiries on reducing the number, but if we reduce the number, then there is a higher chance of abuse. Other entities doing other businesses may turn themselves into private equity in order to avoid tax. Do you have an average? Do you have an average number in this regard? Concerning existing private equity funds, what is the average number of investors for each fund, for a fund? The trade reflects the view that the number is 5 or more. If they have recruited more than, say, they have recruited 50 or more, then it may just be may as well be a public offer. Mr. Michael Tian. Well, I'm not in this business, Mr. Chairman, but I'm an investor. I did participate in private equity fund through foreign banks. I just want to ask a simple question. Well, as for investors, this arrangement doesn't benefit me. So what's the point of doing that? I'm an investor. I can invest in private equity, whether offshore private equity. It doesn't affect me. The exemption will only make the private equity fund management better, not for the investors, right? In terms of tax burden, the directors may be benefited directly or indirectly. You, being an investor, will get more profit. No, I'm sorry. Well, I don't have to pay tax if it is an offshore fund. The member is right. Concerning offshore funds, since 2006, offshore funds are exempted from profits tax. As for private equity funds, there are two areas of uncertainty. First, definition of securities. Now, it refers to listed securities, but not private securities of private companies. The second area is specified person. A licensee of the SFC is a specified person, but the private equity may not have a license from the SFC. So I know that there is no difference as far as the majority investors is concerned. It only makes life easier for those who are engaged in this private equity business. I just want to ask whether we do it because Singapore provides such an exemption. My third question is about the Shanghai-Hong Kong Stock Connect. Will that enable more foreign investors to invest in Shanghai through private equity funds by way of participating in offshore trading? As far as the investors are concerned, there are professional investors or high-end clients who do invest in private equity in their asset allocation, and the arrangement will benefit them. What about the second question, remember? Now, there is the Shanghai-Hong Kong Stock Connect. Shanghai will the Southeast Asian or foreign investors invest in Shanghai through private equity if they have 5 or more investors in the fund? Singapore has similar exemption as mentioned by member. That's the first point. As for the Shanghai-Hong Kong Stock Connect, the shares in that scheme are listed shares. It's not that they are totally unrelated. Private equity invest in portfolio companies, and when the portfolio companies are big enough to be listed, then they will have bigger benefits when the companies are listed. If they can reach the threshold, in the long run, they will be benefited. Maybe Mr. Chiu can speak on the other part. Now, if it is a private equity fund, it invests mainly in a private company, or in private companies. It doesn't invest in listed companies. A private equity fund may have surplus cash and invest in other vehicles, including listed companies. Now, if these offshore private equity funds come to Hong Kong and do business, and they have money and invest in securities, that is helpful to Hong Kong. That will also increase the turnover in Hong Kong. Mr. Wong Kok-heng. I have 2 questions for the administration. If tax exemption is given to offshore private equity companies, what will be the revenue forgone per year? That's the first question. Well, concerning paragraph 3, the capital under management in private equity funds increased by 16% year-on-year. Even before there is any tax exemption, the increase is rather substantial. Is it really necessary, therefore, to give tax exemption to offshore private equity funds? Ms. Yan. First, concerning the possible revenue forgone, we expect that the amount will be very small. These offshore funds don't have to pay tax. In fact, the revenue collected is rather small. And we expect that the revenue forgone will not be very substantial.
既然而家即係喺香港嗰個私募基金管理嘅資產咧，其實都增長發展得唔錯。
Since the growth rate of private equity managed in Hong Kong is growing rather substantially, why we need to provide an added incentive. Now we are glad that the increase is substantial, and we have the advantages and strengths in attracting private equity funds, but we are also facing competition within the region and outside the region. Similar exemptions are given to private equity funds, and we have received quite a lot of advice or comments on this. As far as our share is only 20% in Asia, and we believe there is much room for improvement. I think we should give it a go, and it is worth doing. When private equity funds are considering choosing a platform for fund management, tax is a rather important concern through our contacts with the trade. Now, they say the amount forgone is very small. Can you give us an estimate? Can you give us a number? Thank you, Chairman. Whether there is any revenue forgone? Our proposal is that we want to encourage offshore private equity funds to make use of the platform in Hong Kong to do their business. There are many offshore private equity funds who are using the platform of Hong Kong or platforms of Hong Kong's competitors. Say the planning of the fund, the operation of the fund, the selling of the fund are not in Hong Kong. We want to bring these operations to Hong Kong. If they come to Hong Kong, then we can tax these operations. We want to encourage these business operations to be brought to Hong Kong, and we give exemption to private equity funds. In fact, there are few examples in which offshore private equity funds have to pay tax in Hong Kong. We believe the number is very small. We don't have actual statistics on that. Mr. Kenneth Leung, the second round. I want to refer to paper 11, or rather paragraphs 11 to 13 concerning the portfolio company. I don't understand why. I understand C, concerning investing in holding immovable property. I don't understand why you put so many restrictions on a portfolio company. The portfolio company in Hong Kong has to pay profit tax. And when dividend is given to overseas private equity fund, that is already distribution after tax.
So why do you still impose so many restrictions on these portfolio companies? Are there any policy considerations or reasons? Or do you think that many portfolio companies would be making use of such exemptions in order to evade tax in the future? I'll ask Mr. Chiu to answer the question. Yes, thank you, Chairman. Well, the current proposal is that for the portfolio companies engaged in the transaction should not hold any immovable property in Hong Kong. In other words, they must not be conducting any business in Hong Kong, and the portfolio company should not hold other companies in Hong Kong, and then the company it hosts will be conducting business in Hong Kong. So that's what's set out in para 11A and B. In other words, all in all, the portfolio company should not be engaging in business in Hong Kong. And that's also what is proposed in policy in the budget 2013-14. So that is a company which is not engaged in any business in Hong Kong, and it does not hold any asset in Hong Kong. But then why do you have to have such restrictions? For example, for a high-tech company which tries to engage in financing or raising funds in Hong Kong through such private equity funds, if that's the case, then that would make some young budding entrepreneurs very difficult to raise funds in Hong Kong. So looking at it from the macroscopic economic development perspective, you should not have included such restrictions in para 11 in the requirement. Yes, we understand the concern of the member, but then at the beginning, we said that we are talking about an exemption for offshore funds. So if the main business is conducted in Hong Kong, if majority of its business is in Hong Kong, then in terms of its nature, it's no longer an offshore operation. So just now, as we just said, if we were to grant them exemption, then it would be a lot more complicated, and it would take us a somewhat longer time to consider it. And the trade understands our consideration. That's why we are offering this tax exemption for offshore funds for the time being, and they believe that that would benefit them, and they welcome that. With regard to the requirements set out in para 11, well, if they're investing in a permanent establishment and the shareholding should not exceed 10% of the value of its own assets, then we are looking at the actual business operations of the fund. For example, if they are just setting up a showroom, that would be purely preparatory or auxiliary in nature. So we would be prepared to give them some flexibility so that they would be able to have 10% of their activities or investments in Hong Kong. And if there is no such exemption at all, then that might render their operation somewhat difficult. That's why we are prepared to offer that concession. Yes, Mr. Chiu, do you have anything to add? Well, the proposed amendment to the Inland Revenue Ordinance, we are talking about a non-Hong Kong registered private company. So it is a private company incorporated outside Hong Kong, and it does not run any business in Hong Kong. It does not hold any immovable property in Hong Kong either. But then we have introduced this safe harbor rule, which are the minimum exemption. So if they do not hold any permanent establishment in Hong Kong, and if they do not hold any immovable property exceeding 10% of the total value of their assets in Hong Kong, that would be okay. Mr. Kenneth Leung? Okay, you're exempting the offshore private equity fund. But then if you're talking about portfolio companies, then is there a direction for you to consider allowing for portfolio companies running some business in Hong Kong? So can you allow for a lower threshold? Because we do want to have new enterprises set up in Hong Kong. It's not just about asset management or tax revenue. So can you talk to the Financial Secretary about this? I hope that, well, if we can have some high-end new technology, all right, if they do not have to come under such a high threshold, all right, you can have ABC here. But then for certain types of companies, if you are prepared to allow them to enter or to come to Hong Kong on a lower threshold, that would be good. And also, apparently, you have a more relaxed rule. Whether or not they are registered in Hong Kong, if you just look at their income threshold, for example, 5% or 10% of their income, so that you can offer a lower threshold, so that if no more than 10% of the income would be derived from Hong Kong, then they would be eligible as portfolio companies to enjoy this tax exemption. So would that be more objective, and would that be more simple to operate? So have you considered those? Thank you. Yes, Ms. Yan or Mr. Chiu, which of you would like to answer? All right, you can bring the comment back for consideration, but then, of course, if you're able to respond right away, that would be good. Well, in the consultation process, we have consulted the trade concerning the de minimis rule. Well, for the institution concerned, is a very common concept. But then for the exempted entity, it can be very broadly defined. But then according to the profession or the trade, they think that we should make reference to the OECD, which has a more relaxed definition. And we are prepared to take on board that relaxed definition. And Mr. Leung is suggesting that the revenue of the company should be taken as the threshold. We have actually taken reference from the views from the trade, and they think that 20% of the assets should be a good threshold, and they've also talked about the income threshold. But then they believe that 10 or 20% of the asset of the company would be a more objective threshold. All right, please note that in the first half of 2015, the administration will be tabling the bill into this council. So without further ado, thank you for coming to this item. Thank you for attending this meeting. Next item, creation or extension of supernumerary directorate posts in the FSTB for establishing an independent insurance authority.
呢個冇 presentation 㗎喎，冇 PowerPoint 係有 presentation 好，我首先歡迎政府。
First of all, welcome to the government representatives. I think we all know them well, so I don't think I need to introduce them. So, Mr. Cheung, can you walk us through the paper? Thank you, Chairman. Well, the paper is about the extension of two supernumerary directorate posts, and it also proposes to create a new supernumerary directorate post. First of all, on the extension of the two posts, one is an AOSGC who is responsible for the completion of the legislative and related work for the establishment of the insurance authority. As the post will lapse on the 30th of October, we propose to extend it by 26 months from the 1st of November 2015 to the 31st of December 2017. Another one is an assistant commissioner of insurance in the office of the commissioner of insurance, and the post will end on the 31st of October 2015. We propose to extend it for 11 months from the 1st of November 2015 to the 30th of September 2016 to ensure that there will be a seamless transfer. And for the newly created post, we do not have a specific date for the post to last, because the duty of the principal executive officer would be to head a preparatory team to help set up the IIA, because we need to set up a team for the preparation of the IIA. That's why we need to have someone to head this team. So I'll be giving you the details of the three posts. First of all, as I said, with regard to the establishment of the IIA, the legislation is the Insurance Amendment bill, and we have already set up a bills committee in this council to scrutinize that bill, and we expect that the ordinance can be enacted by July 2015, and there will be a three-stage transition from the Commissioner of the Insurance Commission to the setting up of the Insurance Authority, and we expect that in around July 2015, after the bill is enacted, within 3 months, we will be able to appoint the members to the Provisional Insurance Authority, and when the Insurance Authority is set up, then it will not be able to take up all the regulatory powers from the OCI right away. We expect that within 6 to 12 months of the setting up of the IIA, first of all, it will take over from the work of the OCI. It will be taking over the regulatory powers on the regulation of the intermediaries and also the insurance companies, and within 12 to 20 months of the setting up of the IA, some codes of conduct for intermediaries. After they are available, then we will first start with the licensing system for the insurance intermediaries. Then we will be introducing the self-regulatory system for insurance intermediaries. So for the extension of the 2 posts, these are AOSGC posts, and also for the Assistant Commissioner of Insurance in our office, these have a lot to do with the establishment of the IIA, but then at the same time, we are actually coming up with a policyholder protection fund, and that's also part of the duty of the AOSGCs within our bureau right now. And one of the highlights of the duties of the Insurance Authority is somewhat different. So for the new post, well, before the establishment of a statutory body, they will have dedicated personnel responsible for the preparatory work of the establishment of the statutory body, and therefore the PEO will be leading several colleagues for the startup work of the authority. He will have to identify an office location, and he would also have to recruit some senior members of the authority. So for the overall preparatory team, we have only got 4 people, so we have exercised a lot of restraint. So other than this PEO, we also have 3 other colleagues helping out, and so that's the highlight of the work of the PEO. As for the detailed tasks, they have been attached to the paper in Annex C, and if members have any detailed questions, I'll be more than happy to take them. So much for my briefing, and I'll be happy to take members' questions. Yes, Mr. Wong Kwok Heng.
Followed by Mrs. Sin Chung Kai, 3 minutes each. Thank you, Chairman. Well, I support this paper. I have a question. The IIA to be established is a very big body. At present, this is a transition, and they are now run by, the authority is now run by civil servants. Now, how can the experience of the civil servants who are now running the insurance authority be passed on to the new IIA? Now, in setting up the new IIA, there will be an open recruitment. Within the IA, there are 150 colleagues. Among these 150 colleagues, about 22 of them are general officers, and other than that, they are actuaries or professional insurance officers. They have rich professional experience, and they do have an advantage in applying for posts in the new IIA. We believe that some of our colleagues who apply for posts in the new IIA, their regulatory experience will be carried forward. But I cannot estimate how many will apply for such posts and whether all of them are willing to apply for such posts. under the IIA. Now, when these officers have an advantage or absolute advantage in applying for the new IIA post, many of them are willing to go over. When the new IIA is established, I hope that experienced professionals who have regulatory experience can move over into the IIA so that the experience can be continued. They do hold a lot of information. I hope they can pay attention to that. Anything to add from you? Yes, I thank Mr. Wong's advice. Mrs. Sin Chung Kai. Yes, I support the proposals. I'm also studying the bill. I hope that the IIA can give added protection to insurance policyholders. I want to ask whether you cannot discharge all these duties with existing resources. I think the work involved is rather routine. Why the existing insurance authority doesn't have staff to do all these jobs? Mr. Chang. Now, in the setting up of new authorities, for example, the Competition Authority or the WKCDA, we create supernumerary posts of 1 or 1.5 years to deal with the setting up process. As for why we cannot have our staff from the IAA to deal with that, they have a strength of 150 bodies. They are very busy. They really don't have time to take up extra duties. The colleague who is responsible for starting the IAA has to formulate recruitment requirements. I believe consultants will be commissioned to set the remuneration package and other employment conditions before open recruitment. It is better to get another group of civil servants to do all these in order to make it fair, because we expect some incumbent IA officers will apply for new jobs from the new IAA. So it's better to get somebody outside the IA to do all these preparations. Do members have further comments? If not, then I'll ask you whether you agree that we will make recommendations to the ESC and the FC. There is no objection. So we conclude our discussion on this item. Thank you. Under AOB, there is none. Okay, thank you very much. Meeting adjourned.